Ladies and gentlemen, we have a beast video to get into here today, folks. I mean, I'm going to try to keep this one under an hour, but it's not going to be easy. We have so much to get into. It's ridiculous, okay? Appreciate everybody joining me here today for this one. So, public count was over $4.2 million here today, closed just under $4.2 million. Unbelievable. Obviously, we were trying to get this portfolio over 4 million for a while there, and then all of a sudden it exploded above 4 million, and now all of a sudden 4.2 mil here today. Congratulations to everybody out there hitting new all-time highs in your portfolios, okay? Alrighty, so we had a bunch to go through in this video. First off, Cake. Cake just came out with earnings about an hour ago. We'll talk about their earnings, my opinions, where's the stock headed from here. SoFi came out with earnings this morning. I'll go over what I saw that was interesting in regards to SoFi and where that stock is headed from here, my plans with it. PayPal came out with earnings this morning. We'll talk about the numbers. We'll talk about where I think that stock's going, those sorts of things. Okay, 3 major investments for me. Fourth thing we'll get into in this video here today is I spent $52,000 on a stock today. We'll talk about what stock that is, why I went ahead and did it. And then we've got a bunch of videos to react to in this one here today. Okay, first one up here, AMD CEO Lisa Su talking about the business. Then Palantir CEO Alex Karp went on with Jensen from Nvidia here today. Anthony Noto went on CNBC here today. And then Dan Niles made a massive call yesterday talking about you'll see 30 to 50% correction crashes in many AI related names next year. And he was been pretty darn on with his calls lately. I got to say that he's, so yeah, we got a lot to go through in today's video, folks. It's a busy action packed one. I appreciate y'all for joining me. One thing and one thing all I need from you guys, if you could just smash that like button for me. I hope you can do that for me, man. That's all I ask in return for doing these beast videos for you guys day in and day out here today. Additionally, if you want to be subscribed here to the channel, you can certainly subscribe. Sometimes people complain. They're like, oh, your videos are too long. It's like, look at a day like today. What am I supposed to cut? Like, Cake came out with their earnings, PayPal and SoFi. If I don't cover those earnings, people are going to be mad at me. Like, how am I not going to cover those? And then, what am I not going to react to one of these videos? See Lisa Su going on CNBC, I'm not going to react to that. Alex Karp and Jensen together, I'm not going to react to that. Anthony Noto, Dan Niles calling for 50% crashes next year. Like, dude, I know my videos are long, but most people that are subscribed to my channel thoroughly enjoy my long beast videos, and I'm glad you guys do, okay? So, yeah, we got all that to go through in today's video. Pinned comment down there. If you're looking to apply, join my private stock group, private wealth group, get access to 1000xstocks.com. We will send you your membership cards once you join us in there. Pinned comment, click on that, fill the form, join us in there. We'll send you your 1000x card and your Steel membership card for the private group as well. Got them right here with me. And then if you join us on a lifetime basis, we'll send you a lifetime card as well. Do keep in mind, demand's been ridiculous in there. We're now up to 2,702 members in there. I'm trying to slow way down on new members next year. So we're going to make a move to $100,000 or more net worth to get in the private group. So if you're under 100K, you'll definitely want to get in there in the next couple months. I don't want people complaining next year saying, oh, you don't allow people under 100K. I've made several calls to action about this. So letting everybody know in advance. If you want to join us, do it now, okay? Or don't join us, and that's on you, okay? Alrighty, guys, appreciate you. Let's get into this. Cheesecake Factory, listen, the cake. B plus income statement here overall. Revenues went to $907 million from $865. Keep in mind, the restaurant category is not in a good place right now. Let me repeat, the restaurant category is not in a good place. Look at Sweet Green numbers, look at Chipotle numbers, look at Cava numbers, look at the other sit-down restaurants. They're pretty bad right now. The entire restaurant category is bad. So Cake's still growing very nicely despite the sector not being in a good place, okay? They brought down food and beverage costs to 21.8% of revenue from 22.6%. And labor expense, that's usually a big one, right? They brought that down to 35.6%. It's always the biggest line item from 35.9% as a restaurant, right? That is very impressive. Now, other operating costs and expenses actually grew to 28.2%. I'm not as worried about that because sometimes that's more, you could have some one-offs in there, some kind of freak things that happen that maybe throw that number up. So actually these two line items, your food, beverage costs, and labor expense, much more important overall because, like I said, one-offs can affect this numbers, overall, right? General administrative expenses, they kept that in line at 6.5%. Depreciation and amortization went up slightly to 3% from 2.9%. Total costs and expenses fell to 95.9% from 61.1%, which is going to mean your profitability as a restaurant is going to definitely increase, right? Income from operations went to $37 million from $33 million. That's up to 4.1% of revenues, right? Net income went to almost $32 million from, a little under $30 million in the same quarter last year. Diluted EPS went to 66 cents from 61 cents. Do keep in mind that income tax provision, that hit hard, that doubled basically on a year-over-year basis. So keep that in mind. That definitely affected profitability. But despite that, despite the sector being weak, despite all this, they still grew, right? They grew their earnings per share. They grew their net income. They grew their revenues. No excuses. That's what I'm talking about. That's what I like to see from my companies. I want to see you put up the numbers regardless, right? North Italia. So North Italia are up to 46 locations. Do keep in mind they're talking about a potential of 200 domestic locations of North Italia over time. So we've got a long expansion opportunity ahead for North Italia. Comps had a rough quarter, year over year, down 3%. I'm not that worried about that. Like if that becomes a longer term trend, we see that play out for a year or two, then we got an issue, right? But, quarter by quarter, like sometimes comps will be really good and, you can't get too excited about it on the other side, right? Flower Child, they're up to 42 locations of Flower Child in 15 states. They're talking about taking that to 700 domestic locations. This is the biggest opportunity for Cake overall as a business model, right? And then additionally, significant off-premise volumes, averaging over 50% of sales are takeout sales, okay? So that's significant. We know we're in a day and age where a lot of folks like to eat at their house, takeout, right? We know DoorDash, Uber Eats, all that stuff has obviously been booming and will continue to boom for at least the next, decade. And so Flower Child's very well positioned to capture a lot of that business. It's not just about people going in there, ordering, sitting down, waiting for somebody to bring it. It's about they make orders on the app. Even my wife does that sometimes. And additionally, takeout business as well. I believe they have an exclusive partnership right now with DoorDash. Maybe over time they'll expand to Uber Eats and others, Grubhub. We'll see what happens with that. Okay. Now, they're talking about they keep expanding more and more locations, right? 13 new restaurants open in 2022, 16 in 2023, 23 open in 2024. This year, they're talking about as many as 25. They need to start going to like 50 plus a year. They got to keep accelerating quite significantly. I would love it if they could take it to at least 40 for 2026. And then after that, take it to 50 plus a year, right? We've got to bump this up. No, where's Cheesecake stock going from here? Well, it's going higher, right? It's going to be a steady riser over time, right? It's going to have little volatility here and there, but it's actually not a super volatile stock. It's just a steady riser over time. Like, it'll give back some gains here and there, then it'll go up again, then it'll give back a little gains, then it'll go up. But the overall trend is up and to the right for Cheesecake Factory, and that's what it is, right? Cheesecake's never going to come in with some shocking number where you're like, oh my gosh, I can't believe they just did blah, blah, blah number, right? It's not that sort of company. They just come in and execute. They trade at a low valuation, and the stock's a buy every single month until 2027. Every single month, right? And heck, it might still be a buy after 2027 as well. And it's been a buy for years now. You look at me, I got shares all the way back from 2023 in the stock, right? And I still continue to buy the stock on and off. I think I even bought some Cheesecake shares today, a little bit. I think in one of my portfolios, I literally bought Cake today, if I recall. So this stock is a buy. It's a buy, and it's a buy, okay? SoFi. Oh my gosh. You want to talk about a flapjack flipper, it'll look no different than SoFi. A plus income statement here. Loans and securitizations, as far as interest income, 830 mil from 671. Other, 61 mil from 51 mil. Total interest income, TII, 891 mil versus 723. As far as total interest expense, that went to 306 mil from 292. They kept that in check. That's very impressive. When your interest income's up that much, right? We can call it, what is that, about $170 million. And your total interest expense is only up, what is that, $14 million roughly? It's nothing. So NII, which is arguably the most important number to look at for like banking related companies, right? $585 million from 431, phenomenal growth. Now, as far as provision for credit losses, that one I kind of draw my attention a little bit there. That went to 9.1 mil from 6 mil, but it's still a low number, an absolute number, right? There was a big increase as a percentage, right? We can call it about a 50% increase, but as far as a raw number, it's actually really low. Total net revenues of the company went to $961 million. That also factors in non-interest income from 671 mil. But the big increases here, specifically this one, loan platform fees are making bank off that. That went from $55 million to 164. Business is blowing up. Look at over the past 9 months. That loan platform's fees went from $78 million to $385 million. That's Anthony Noto wanting to run this business asset light, right? Incredible numbers. Now, as far as income before income taxes, $148 million from $63 million. Net income went to $139 mil from $60 mil. That's over a double up there. And diluted EPS went to 11 cents from 5 cents, over a double up there. That is an A+ income statement there, an absolute banger from SoFi. As far as the amount of members, they're now up to 12.6 million members, customers, whatever you want to call them on SoFi. That was 35% growth year over year. Just in this quarter, they added 905 million new members, which is an incredible number because that's roughly half the amount in total they acquired in 2022, right? So basically, they're now doing in a 3-month span what just a few years ago they were doing in a 6-month span as far as new customers go. So they're doing a phenomenal job continuing to acquire more and more new customers. Now, where's SoFi stock going from here? Well, my opinion is the next 6 to 12 months, it's very simple. If the market's going up, if we're staying risk on, SoFi is going to continue to move up and move up and move up. If the market goes risk off, this one's going to get wrecked, right? It's going to get slapped hard, just like Palantir, Tussle, all the other kind of risk on stocks, right? But at the end of the day, you even see like this stock wanted to go down today and they wouldn't let it go down. People were out there buying it up, and it ended up finishing up 5.5%. We were up $8,300 today on SoFi stock. Now up $116,000 on the stock, up 281%, right? On a stock that I haven't even been in for that long. Like most of my shares I acquired was 2024, 2025. So like we're just making bank on this stock. It's going to, no pun intended. And as far as where SoFi goes long term, it's likely a $50 to $100 stock long term. But short term, next 6 to 12 months, it's all dependent upon the market. We stay hot in this market, SoFi will continue to shock you to the upside. Next thing you know, we'll be talking about a $35 or $40 stock. We go risk off, SoFi will get hammered. You'll see it go down 25, 22, something like that, right? PayPal. Net revenue is 8.4 mil from $7.8 million. Transaction expense grew, expenses grew, but they were not up that much. As far as customer support, sales and marketing, technology and development, they kept those numbers in check considering, revenues was up nearly $600 million year over year, right? Operating income went to $1.52 million from $1.39 million. Income before income taxes went to $1.53 billion from $1.31 billion, so over $200 million increase in income before income taxes. Net income went to $1.24 billion from just over $1 billion in the same quarter last year, right? They had another expense that really hurt them in the same quarter last year, whereas now they had a benefit there, right? And that's where I talk about these one-offs can significantly affect your profitability, right? Diluted EPS went to $1.30 from 99 cents. That's a grade A. What would make this an A+ would have been faster revenue growth, right? The revenue growth was good, but, we really got to talk about strong double-digit revenue growth for me to say, I'm going to give you an A+. But that's a grade A, man. It's extremely impressive income statement there. You got revenue with, we can call it high single-digit revenue growth, right? And you got your net income and your diluted EPS going up at a far faster clip, and you're keeping your expenses in profile like you're a grade A student. Phenomenal from PayPal. Now, something very exciting is going on with PayPal's business model right now, okay? I'm not sure how many people are looking at this, but this matters significantly, and this is why PayPal stock bottomed many months ago and why it continues to move up, okay? Look at this. If we go back, PayPal was on a consistent deceleration of revenue growth, right? It was obvious. And growth bottomed right here at a 1% revenue growth back in this quarter, right? Well, last quarter, they ended up growing revenue 5%. And in this latest quarter, they just reported 7% revenue growth. So now we're on a revenue acceleration phase for this company, which is usually a very fun phase. Like, again, I could show you just about any stock that goes through a revenue acceleration phase usually has a very, let's call it, fun stock price over that same amount of time. And so this matters significantly because you have to start adjusting your growth rates. There's a big difference between a company that you think is going to grow 1 or 3% versus 5% versus 7% or 9%. We don't know. Now we're in a phase with PayPal. We don't know how high the growth is going to go. We just know it's accelerating. Like what's next quarter? I don't know. Maybe it's 8%, 9%, 10% growth. We're going to have to see, right? Additionally, cash flow from operations came in at $2 billion and free cash flow came in at $1.7 billion. Adjusted free cash flow came in at $2.3 billion, which excludes the net timing impact between originating buy now, pay later receivables receivables as held for sale for the subsequent sale of receivables. Keep in mind, a lot of that buy now, pay later business, they end up selling off to somebody else. So they remain asset light. They don't like to take the long-term risk of that. So cash flows are booming for the company. Cash and cash equivalents and investments total $14.4 billion for the company versus $11.4 billion of debt. So they could wipe out that debt tomorrow if they wanted and still have a ton of money around, right? They returned $1.5 billion to stockholders by repurchasing approximately 21 million shares of the stock in this latest quarter. On a trailing 12-month basis, they've returned $5.7 billion to stockholders, repurchasing around 78 million shares of stock. This is when you want to buy, man. PayPal stock's been dirt cheap. It's been $50 to $80 for a while now. This is exactly when you want to be buying every share in sight if you're PayPal, right? Additionally, this was pretty impactful. They started a dividend and they're planning to pay a quarterly dividend going forward. Now, you might say, what's the big deal with the quarterly dividend? Listen, there's a lot of individuals out there and a lot of investors that will not consider a stock that doesn't pay a dividend. Additionally, PayPal's a value stock, right? They have growth, 7% revenue growth in this latest quarter, but it trades at value valuations. Look at the forward P of PayPal. What is it, 12, 11, somewhere around there roughly, right? That's very attractive to value investors. Somebody that's a mega growth investor, they may look at PayPal like, I don't want PayPal stock. 7% revenue growth is nothing. I want a company that's growing revenues 50%. I want Palantir, right? Or I want SoFi, and that's fine. But if you're going to attract a lot of value investors, you got to give that dividend. There's so many value funds, so many value investors that will not consider a stock unless it pays a dividend. So PayPal is now going to pay a dividend moving forward. And so a lot of investors will start to look at PayPal and say, you know what? I'm going to go ahead. I'm going to dip my toe in this one. It's a great value stock. They got a consistent business model. They're now accelerating growth, right? And it trades at extremely low trailing 12-month Ps, forward Ps, 2-year forward P, doesn't matter what you look at, right? So brilliant move by Alex Chriss. Alex Chriss continues to impress me. Obviously, this is something that has to go through the board of directors, but my guess is Alex Chriss has something to do with this as well. And also impressive that Alex Chriss is now accelerating these revenue growth rates. People were a little skeptical of what Alex Chriss was up to a few quarters ago. So like, what is going on here, man? The revenue growth keeps decelerating. Now they're starting to see all the changes Alex Chriss put in place and like, okay, we see what he was doing. Okay, we like him now, right? Now, this was the biggest thing that happened today. This was bigger than the dividend. This was bigger than the revenue growth acceleration. This was bigger than the diluted EPS flying up and the basic diluted EPS flying up and the net income flying up. This was the biggest thing, okay? PayPal partners with OpenAI to let users pay for their shopping within ChatGPT. PayPal said on Tuesday that it's adopting a protocol in combination with OpenAI's instant checkout feature to let users pay for their shopping directly within ChatGPT starting in 2026. So if you're getting excited about numbers in 2026, we have some here, okay? PayPal is adopting the Agentic Commerce Protocol, an open source specification developed by OpenAI that lets merchants make their products available within AI apps, consequently enabling users to shop using AI agents. Meanwhile, OpenAI's instant checkout feature, launched in September, lets users confirm their order, shipping, payment details, and complete purchases without leaving ChatGPT. Customers can use their PayPal wallets for checkout, which the company said would enable it to provide buyer and seller protection as well as dispute resolution. The company is also providing technology to handle card payments from within ChatGPT using a separate payment API. Remember, ladies and gentlemen, okay, ChatGPT right now has a valuation of around $500 billion on it. In order for these latest investors to make money on this, they need OpenAI to become $1 trillion valuation, $1.5 trillion valuation, $2 trillion valuation, right? And a huge component of if OpenAI gets there or not is going to be commerce. They've got to become a major commerce platform over the next 5 to 10 years. Otherwise, it's going to be hard to justify that current valuation, right? And next year, merchants using PayPal products will have their products be discoverable on ChatGPT, starting with categories like apparel, fashion, beauty, home improvement, and electronics. Merchants will not need to build any integrations as PayPal will handle merchant routing and payments behind the scenes. That's phenomenal. That increases your likelihood of success immensely. You make it easier for folks. Much higher probability of success. The company said it is launching an agentic commerce suite that would let merchants feature their catalogs within AI apps, accept payments on different AI apps, and get insights about consumer behavior. PayPal has been working to insert itself in payments partner with various AI companies, such as they did a deal with Perplexity, right? They also did something with Google's agent payments protocol. So, you got to understand, like, how did PayPal become such a massive platform where they have 400 million users or whatever it is, right? One of the big ways they did that and achieved that is back in the day, they partnered with eBay. They used to be like this with eBay, and then they ended up owning eBay over time, right? And eBay was a huge growing platform in commerce 20 years ago, right? 15 years ago, 25 years ago. Like, eBay was it. They were growing substantially. And so PayPal and eBay became like this. And if I even recall, there was a time when it was like hard to use anything to check out with eBay other than PayPal, right? So now PayPal is looking, they say, hey, you know what? We see the opportunity for these AI companies to be the next massive companies as far as commerce goes, right? And transactions, these sorts of things. Let's get in early with them. Let's partner early. And so you want to partner early rather than late with these companies. You're going to get first mover advantage there, and you'll build a much closer relationship with companies like this, right? Huge for PayPal. Now, PayPal will not be the only company, in my opinion, to partner as a digital wallet for ChatGPT over time. But when you're the first mover, you get that first mover advantage. That's why it's called the first mover advantage, right? And so that's going to be substantial for this company over time. Now, as far as PayPal, what are my projections for PayPal? Bull case, base case, bear case for this company. My bull case for PayPal has them only doing 9% revenue growth. This isn't something crazy. Like, they've been accelerating from 1% to 5% to the latest quarter 7%. Who knows where that's going to continue to accelerate with? And then 2026, they start to benefit somewhat from these AI platforms as well, right? But I'm doing 9% revenue growth, 11% net income growth. That gives me a 16% net income margins come 2029. 20 to 25p is very fair for a company growing almost 10% revenues and 10% plus net income. That gives me a stock that's somewhere between 156 and 195. I think PayPal closed at like $73 today or $72 or something like that, right? Base case for PayPal, 7% revenue growth, which is what they just did in the latest quarter. 9% net income growth, which is significantly under what they actually grew in the latest quarter, right? 18 to 23p's, easy peasy lemon squeezy for a company growing at these sorts of growth rates, right? That gives me a stock that's 130 to 167, so we can call a double up from here, if not over a double up. In bear case, I still get a good compounded annual growth rate on this company, right? It's a buy. PayPal's a buy today. It's a buy yesterday, it was a buy tomorrow, it's a buy next week, it's a buy next month, it's a buy for the rest of the year, it's a buy next year. Bottom line in regards to PayPal. So what stock did I end up putting about $52,000 in today? Well, I announced it in my private stock group. I bought 500 shares of PayPal in one of my private portfolios. And then additionally, I made a move in the public count. I took down my Adobe position just a little bit, about $10,000, and I put $10,000 into PayPal, or just over $10,000 more into PayPal essentially. So, brought my exposure up a little bit in regards to PayPal. I like it, man. I like it. They're doing well. I think it was a question mark 6 months ago, 9 months ago. I think a lot of people were questioning Alex Chriss. Is he actually going to pull around this turnaround? Like, you don't know, the numbers are getting worse. Now the numbers are just getting better. The partnerships, it's like they're starting to partner with so many different folks. Like, they did that big deal in what was it, Saudi Arabia and the Middle East here recently. Now we got the OpenAI deal. They got the Perplexity deal, the Google deal. Whew, they're rolling, man. They're rolling. So he's pulling it off. And, bright days ahead for PayPal over the next several years. AMD.
You. I mean, it's getting ridiculous at this point, but I'll do it again. Congratulations to Lisa Sue.
Good morning, Jim. Good morning, David. Good morning, Carl. Great to be here with you guys this morning.
Well, let's talk about this deal. This sounds like something that I would never expect from the government. It is almost like TVA. It's the government saying, listen, we can't wait. We have to do this, and we have to do it now. And it sounds like we have to do it now because you're able to deliver something, next year? Is it really? Can be done that fast?
Absolutely, Jim. So we were super excited to announce a new partnership with the Department of Energy. Secretary Wright has been really leading this, with such an ambitious vision of what we want to do in AI for this country. So we announced 2 new supercomputers that use our latest generation AI technology. And the key is, the focus from Secretary Wright was, let's do this as fast as possible. We have so many researchers in the nation that want more computing. And so, yes, we're going to develop two supercomputers. One of them will be deployed early next year, and then the other one will be deployed with our next generation MI400 series. So fantastic partnership, and I'm really excited to be able to contribute to this really important mission.
I don't mean to belittle it, but I got to talk a little horse race. You know, I think the MI400 is in some ways equal to NVIDIA. I want to know whether this was a contest and you got this and NVIDIA did not.
Well, as you know, Jim, I mean, this is a place where the national labs are truly a national treasure for the United States. Oak Ridge National Labs has been a great partner for AMD, and you can imagine everybody would want their compute in a national lab. So MI400 series is fantastic. We've been working across the board, across all industries, all of the national labs, all the sovereign countries, and I'm super excited to be able to deploy both our current generation MI355 and our next generation MI430 at the Oak Ridge National Labs through these two supercomputers.
Sometimes you got to wonder, does AMD, and this is an important point, listen, is AMD able to outcompete NVIDIA on certain deals because they're smaller and the deals make more sense to them? Like, you see a $1 billion deal, right? That's significant for AMD. Is it significant for NVIDIA? No, it's not. So would NVIDIA fight hard for a deal like this? Maybe, or maybe not, right? Whereas AMD's like, we're going to fight for that deal. So there's a lot of these smaller deals that AMD will likely go after and probably win because they're just going to compete harder for those deals. Because NVIDIA looks at it and like, man, we're doing such insane numbers with all these companies. Like, what does it even matter, right? Look at this. Sony's working on their next generation console with AMD. Xbox is working on their next generation console with AMD, right? Like, AMD's just in a place where they're able to, I think, outcompete NVIDIA in a lot of places that maybe NVIDIA would want, but it's just like, it's not really material to their business. And sometimes it's just like they let these potential deals go, right? Or maybe it was different. Maybe NVIDIA fought just as hard as AMD, but AMD had a better product or a better price or something like that. That could be too, right? But I think there's a lot more to be said about AMD is going to be able to fight harder for these smaller deals.
What caught my eye in the AMD release is that this is not just for traditional supercomputing for tech. This energy, medicine, health, national security, this to me sounds like a government initiative to stay ahead of everybody else in the world in all of these verticals, not just traditional data center compute. Can you tell us how, if I were, say, Thermo Fisher, or if I were Eli Lilly, I would be able to get into this and say, I want some of that compute power?
You're absolutely right, Jim. This is actually a non-traditional partnership between the government and industry. What we thought to do was, number one, we want to get as much compute as possible, as quickly as possible to the national labs. And they're going to do all kinds of research in medicine and energy and national security, which is wonderful. But we also said, there are industries that would, private industries that would like access to some of this compute as well. So the Eli Lillys of the world, the Thermo Fishers, all of these folks would also be able to participate as we bring up these clusters. And it is a very unique partnership. I would say, Secretary Wright said it best. This is the first time that he's announcing something where, the very first time I met Secretary Wright, he said, hey, bring me ideas, Lisa. Bring me ideas that get us more AI in the government faster. And I have to say, he was very open. We love the partnership with Oak Ridge National Labs. Our engineers and scientists are really, really excited about contributing at the national scale for our U.S. AI efforts.
The other big story, Lisa, that made news regarding you guys in recent days was IBM saying about 4 days ago that one of their key quantum algos run on chips from you that are pretty commonly available, and it's raised a lot of questions about the possibility of commercializing those powerful computers.
Well, we are also very excited about the partnership with IBM. And in general, when you think about quantum computing, people were thinking that quantum is, it's going to take years to develop. And when you really think about it, we're not in a place where we can wait years for these developments. We want these developments, really making a difference now. IBM and AMD announced this quantum computing partnership. Our researchers have been working together. And the key is we're going to take the best of classical compute or traditional compute, which is what we've spent all of this research and development on, and the best of IBM's quantum computing, and really putting them side by side in applications. So thinking about, how we solve the biggest material science problems, how we think about, some of the biggest energy problems. And this is an area where, again, when I think about the work that we're going to do with DOE, I think it's going to continue, it's going to be across all of these fields, including how do we get quantum, used in these new workloads as soon as possible. So this is kind of the world that we're in with compute today. It's all about speed and how do we get the most compute on the most important challenges as soon as possible.
Lisa, it's David. Just sort of more broadly speaking here, it's not as though other companies aren't developing plenty of chips as well, whether it's Amazon with the Trainium or Google and the TPUs and Meta. I'm just sort of curious from your perspective in terms of especially the inference market, but over time here, does the addressable market for AMD start to shrink as a result of all these potential competitors?
David, actually, it's exactly the opposite. I think what we're seeing is that the addressable market for AI and inference is actually increasing. We're seeing an acceleration of the use of AI, because as models get better, as enterprises are thinking about, how they can deploy these models, there's a lot more compute that's necessary, and we're seeing that across the board with the CapEx spending, as well as in our direct conversations with customers. And, David, I think the most important thing for people to recognize is a big market is good for all of us. That has been our mantra, is to develop technology that can go across all of these verticals. And I love seeing our technology in the national labs and also across all of these enterprises and the cloud.
Yeah, so I don't have a lot to add there other than AMD and Lisa Su are continuing to execute the way I would expect them to execute. Phenomenal. Alrighty, next up here, Alex Karp and Jensen.
Actually to provide business decisions. And Alex, I'm actually going to start with you, the CEO of Palantir, just to explain, does that mean no human intervention? Can you just explain how this would work and use Lowe's as an example?
Well, first of all, I'm delighted to be on the stage with what many people I believe to be one of the great entrepreneurs of my lifetime and a patriot. And it means a lot to me to be here. So we have a product called Ontology. You could think of it as essentially a digital representative of your enterprise, including security model, which essentially takes the disabilities out of large language models and allows you to move decision-making to the front line with people, without people, depending on how you're doing it. In the context of Lowe's and other enterprises, it allows you to essentially automate decision-making, like how would your supply chain work? How would it work if it changed? How do you get the cheapest good to the right place, given that there may be disruption? But in general, what's very, very special, I believe, about our partnership is we're going to be able to move 2x, and I think in the future even faster. So you get a much, much faster, and actually because you can control it in a more granular way, much faster, much cheaper. And then the macro thing that I'm actually most excited about, which for our country is, because of that, you can do manufacturing in America, you can make the workers stronger and better, and you have more competition because you can use open weight models, open source models. You can use any hyperscaler. You can decide not to use a hyperscaler. This is much, much better for America, much better for workers, much better for industry. It's cheaper, it's faster. And obviously they have one of the world's top tech teams, and we work very well with them.
Before we go further here, you may say, how did Palantir stock not really move today? Like, it was up 0.2%, right? On, a big deal. The fact that Alex Karp is, sharing seats with Jensen, right? The center of the universe, like, that's a big deal. Why is the stock only up 2%? Here's why. Palantir has priced in a lot of good news. The valuation has exploded. Everybody's waiting now on Palantir's earnings and to see what that revenue growth comes in at, right? People are trying to see, is it going to start decelerating? Is it going to accelerate more, right? Are we going to go to 50%, 55%, 60%? Like, what's going to happen here, right? That matters much more than, Alex Karp being on a stage with Jensen, right? And doing an interview with Jensen. It's big, but it's not stock price moving at this point in time. We got to see what the revenue growth is. If the revenue growth accelerates to another level higher, then we'll talk about the stock approaches 200, right? But we got to see that. If we don't see that, then Palantir stock will start to slowly break down.
And just in regards to that collaboration, then who would actually be procuring the hardware? Is this like a company like Lowe's? Do they have to put the upfront cost, with their existing GPUs and then working with Palantir? Is that how it works? Or
first of all, it's amazing to think that the Palantir Ontology platform has achieved all of this and they're the fastest enterprise growing platform in the world. In a lot of ways, it gives enterprises what we all want, which is intelligence and the ability to make good decisions fast. And now we're going to supercharge it with NVIDIA's accelerated computing for the first time. And so NVIDIA's CUDA accelerated computing is going to get integrated. We're going to be able to put NVIDIA's AI libraries on top of that and open source model that we're working on together into the ontology platform. And you'll run it in the cloud, any cloud, or you run it on-prem or even a private cloud. And so, as you know, NVIDIA runs everywhere. And so you could buy a server from HP or Dell. You could be in another country and you want to set up your own private cloud. We got no trouble with that. And so it doesn't matter. We run everywhere, and Palantir runs everywhere.
But you're talking about the future then. So this isn't something that would be accretive to revenues just in the near term. You're still working it out. And I know Lowe's is an example, but are there other customers?
Well, at Palantir, we just do what's best for our customers. We work downstream for value creation. So what we believe, we know when it's faster, better, more accurate, and more flexible, and creates a better future for them because they can choose how they want to run their applications. We'll do very well. And at Palantir, we're doing very well in revenue and profit, and that's not actually our primary motivation now. And the reason we've done so well on profit and on growth is because you just have to create value. This creates more value for the end user.
But you just said before, too, that the human may not even be involved with some of these decisions. And I guess that is a major concern in this day and age, that AI efficiencies could take away from or displace.
Kind of strange. Alec Karp just took that, she was asking Jensen, and then he just took that over there. A little strange, right?
Job force. So couldn't something like this collaboration do that?
It's interesting. When you say humans don't have to be in the loop, that doesn't inherently mean there aren't cases where humans need to be in the loop. For example, 40 years ago, we had 40x more manufacturing jobs than we have now. So it's you can make more manufacturing jobs, which are humans, working class humans. You can build things you couldn't build in the past. And those humans become more and more valuable than they were in the past. In the defense context, you have situations where humans have to be in the loop, offense, situations where humans shouldn't be in the loop, like defense. Our collaboration makes all those use cases better for workers, for manufacturing, for defense, for offense, and in general, because it allows people to use any kind of model, any kind of compute structure. It makes America stronger and better.
Whenever a business is more productive, whenever they can move faster, their business grows, they hire more people. And so I think this idea that AI is going to take jobs is going to change everyone's job. That's for sure. But I think it's going to make companies more productive. We're more productive today because of AI. We're hiring more people.
Yeah. So let me give my opinion on, is AI going to destroy jobs, and are we all screwed? And those sorts of things. Listen, the truth is, AI will displace a ton of jobs over the next 5-10 years. No debating that. But there's going to be so many jobs created. In the end, it's going to be ridiculous. So many industries will boom and jobs will boom that you never saw coming. You're like, wait, how did this happen, right? No different than he talks about, everybody used to work in the factory, right? My granddad, he used to work for a company named Johns Manville, making asbestos products, right? And that was a job that he did for a long time. I don't know if he worked there at that factory for 10 years or 20 years or 30 years. So it was a long time he worked there, right? And that was his main income. And he had other side businesses and things like that, right? But that's what he did. And so that job doesn't exist now, right? But any other jobs do exist, right? My real estate marketing company, when I started that, photos and videos for the internet, for homes that were going up for sale, that wasn't a job that was even possible 10 or 20 years prior to that. But the internet age changed everything. Smartphones changed everything, right? And that became a job, right? Software is like my 1000xstocks.com. Decades ago that wouldn't have existed. And now it exists, right? And I have people that work for me and make incomes from that and all that stuff, right? You look at Palantir, that massive company that's been created over the past couple decades here, and look at what they've been able to do, and look at how many people work for that company, right? That maybe used to, make shoes. Or Nvidia, look at how massive Nvidia is, and look at how many employees that company has, and how many people work for that company, right? Despite all their fancy tech that might have used to work, I don't know, fishing out in San Francisco or something. Like, you know what I mean? Like, it's incredible. So technology, it will displace jobs, but it'll create massive amounts of new jobs. And whatever's new and created actually ends up being a far better job than what people were doing previously, right? I don't think any of us want to go work at the steel mill, do we? I don't think so. So, alrighty, next up here, SoFi CEO, Anthony Noto.
Some nice earnings there. We're looking at the stock this morning. Help us understand what's driving this, and then we can try to maybe look out into the future to understand a little bit better what 2026 may portend.
Sure. Well, thanks for having me on this morning. We had an exceptional quarter in every way. What's driving our growth is our unique strategy. We're the only place that on a digital platform you can get all your financial needs served across big decisions that you'll make, like buying a home or paying for college, day-to-day activity like a SoFi Money account or investing for your future, or needing a charge card to pay at the point of sale. That diversification has driven really strong member and product growth. Our members grew 35% year over year. Products grew 36% year over year, and that manifests itself in revenue growth of 38%. We've been public for 17 quarters, and every quarter of those last 17, we've achieved the rule of 40 or more. We've averaged about 58%, and that's taking your revenue growth and your EBITDA margin. And this quarter was 67. So it's a combination of durable growth, innovation, and brand building.
So, Anthony, what is the product right now when you look at sort of the multiple different products that you offer in terms of the tip of the spear that's bringing new customers into your ecosystem, which then you're effectively selling, and upselling them other products? What is it that's happening here?
Sure. SoFi Money is by far one of the things that are at the tip of the spear. We have 6 million members. It's a very unique offering. It's the best of checking and savings in one. We give high interest, about a 3.8% APY today. We charge no fees. We provide reward points. You can pay anybody, anywhere that you would like. You can pay via an email address, via a phone number, via your debit card, via ACH. You can now do instant wires as well. So we try to deliver the best place to save, the best place to spend, to do it safely, quickly, and cheaply. In addition to that, you also become a member and you get free certified financial planning, because we're trying to help you spend less than you make and invest the rest. Half of the Americans in the United States don't invest.
Hey, hold your horses. There's just one flipping flapjack in a moment. What's the number one key to being a successful investor in the stock market that Jeremy Lefebvre says all the time? More income than expenses, right? More income than expenses. That's half the battle. You do that? Okay, now we can talk about income statements, balance sheets, forward PEs, run projections, right? You don't have more than income than expenses. It's going to be tough. And
it's primarily because they have no discretionary income to achieve their goals. So that is at the tip of the sword. Another product, Relay. Both products are over 6 million products, both Relay and SoFi Money. Those are the tip of the sword. And then we drive about 40% cross-buy. It was a record this quarter because we have this breadth of products. We're using information that we have about you to help you borrow better, save better, spend better, and invest better. So that is helping drive.
Let me mention another key product here that SoFi has that has been definitely attracting customers that they've been kind of undercutting on, at least from what I've seen, is personal loans. And so what people will do essentially is, let's say somebody's got $10,000 in credit card debt. We know credit cards have insane APYs, right? Like 25%, 28%, something insane, right? SoFi might offer an individual, if they have good enough credit, right, basically a personal loan for $10,000 at maybe 9%, 10%, 11%, something like that, right? And SoFi goes ahead and does that loan, right? And then that person uses that money. Hopefully they use that money to go pay off that credit card, right? And now they just switched from a 25 or 28% interest rate down to 9%, 10%, 11%, whatever they have to pay SoFi, right? And then what SoFi can then do, they can also then go ahead and sell off that loan risk if they want, right? Which is something they might do. They might say, you know what, we don't actually want to take that risk. We want to start this loan, but now we don't want to take that risk, so they sell it off to somebody else. So, there's a lot of ways that SoFi can acquire customers, and they're doing a dang good job because they just added nearly 1 million new customers just in the quarter.
Taking share from? If you were sitting around on a Monday morning with a whiteboard,
traditional banks,
looking at sort of who you actually think of as your competitor set today, who is it? Because obviously there's the banks, there's a number of the digital platforms. I mean, I'm just curious what you would. I won't answer. What do you think?
Yeah, it's not what I think, it's what I know. We can actually see where the money's coming from directly every day, and it's really coming from the banks. In the United States, there's over five.
Like, no disrespect to the gentleman asking the question, but come on. Where do you think it's coming from? Like, where do you think he's taking the market share? Out of the sky? Like, of course, he's coming from traditional banks. It's coming from people that maybe would have went Wells Fargo, Bank of America, Chase, whoever, right?
Banks. The large banks have trillions of dollars of deposits. We're at about $33 billion of deposits today. We added a record of $3 billion of deposits. And those deposits are coming from the big banks, the largest banks in our country. And that's on the SoFi Money product, which, as I mentioned, is the tip of the sword. In Invest, we're really actually creating new investors as well as novice investors and helping them get up the learning curve. Within student loan refinancing, we really don't compete against anyone because it's a product that's not really offered by big financial institutions. I would say in mortgage, the big banks do not offer mortgage to everyday Main Street customers.
That's actually true. Yeah.
And so in each product category, the competitor is different, but overall, it's the big banks.
Right. Okay, I don't know if you saw.
Yeah, I don't know if a lot of you guys know. A lot of you can't even get a mortgage from like a big bank. Like, they kind of shun that business away. They're either not involved or they kind of like don't want that business, which is intriguing, right? Like, you would think like, oh, I bank with Wells Fargo, or I bank with Bank of America, I bank with Citibank, I bank with, JP Morgan Chase, whoever. That's who I'm going to for my home loan. A lot of them are like, not talking to us about that. We're not interested in that. It's interesting. SoFi's like, oh, we'll take that business. That's fine with us, right? We're not going to shun that away.
This morning, and I don't know how early you've been up because I imagine you're on the West Coast, but PayPal and OpenAI just announced a partnership where you're going to actually be able to effectively pay for things using PayPal inside of ChatGPT going forward. And to me, this has huge implications for the entire sort of financial community because there's a question of both of the opportunity set to effectively partner with some of these large language models and chatbots, but there's also the possibility of remarkable amounts of disruption that could ultimately take place. How are you thinking about that?
Sure. There are two technology super cycles happening at the same time, both of which that impact the fintech sector and SoFi specifically. One is AI and the other is blockchain. We launched this quarter SoFi Pay, and you can now send dollars from the United States through a level 2 blockchain via SoFi to someone in Mexico and have it convert into the local fiat there in pesos. We'll roll that out.
Love it. I love SoFi continue to innovate with stuff like that. Like, just another way to acquire more customers, right? There's plenty of people out there that need something like that, right?
The entire world, and then we'll take the SoFi Pay app, which will allow you to pay not just via blockchain and stablecoin, which SoFi will issue, but allow you to pay any other way that you would like to. So it's a universal payment capability. So we're going to put the SoFi app in these foreign countries to allow international payments to be made. What I'd say about these press releases with ChatGPT and others is we're launching products. We're not putting out press releases. There was one yesterday about a stable coin with a big bank. Let's watch what people actually launch and the impact that they're having. The reaction that we got from U.S. consumers and our members from launching international remittance, cheaper, faster, and safer than the current mechanisms, was really positive. And so you'll continue to see us innovate behind both AI and blockchain. One thing that we didn't talk about is that we will be the first national bank in the United States to launch buy, sell, and hold crypto on our platform. First national bank to offer that by the end of the year. We'll launch a stablecoin in Q1, which will help us really drive faster, cheaper, and safer payments as well.
I mean, SoFi's just a stock you got to own, is it not? Like, it just is. I'm so happy I built a position in that stock. Like, Anthony Noto is just in that team, right? It's not just him, it's his whole team there. They're just executing. They're innovating quickly. They're launching new products and services that people love, and it shows in the numbers. Like, if the customers didn't love it, like, they wouldn't be acquiring all these members, and their revenue wouldn't be skyrocketing, their profitability wouldn't be skyrocketing like this, right? Like, they're launching new stuff, they're acquiring tons of customers, they put up their numbers, and I'm just a proud shareholder. Like, I don't know what else to say, man. I'm just a very, very proud shareholder of SoFi. And yeah, stock's going to $50 to $100 long term, in my personal opinion, right? Short term, that depends on where the market heads here, risk on, risk off, because it's definitely a risk on, risk off type stock. Dan Niles.
Just to kick things off, how are you thinking about...
Before we get into this, by the way, Dan Niles, he made a great call. I think it was either a month ago or a couple months ago, and I reacted to it here on the reaction channel, Jeremy Lefebvre Makes Money, right? He said the market was going to rally all the way to Thanksgiving. I mean, gosh, like, that call's looking pretty freaking good right now, right? If the market continues to rally all the way to Thanksgiving, like he was 100% on, right? Like that was an impressive call. I got to say, if it ends up playing out, we got to see how things finish out in, not only this month, but in November. But geez, like as of right now, that call from a couple months ago, that's looking right on.
Week ahead, especially in light of all these kind of idiosyncratic pockets that we're seeing, stocks rise today, for example, Qualcomm.
Yeah, I mean, the way I'm looking at it is over the weekend, you obviously had trade deals with 4 different countries. That was a big positive. On Wednesday, you get the Fed meeting where you're going to get a cut. And you could argue 2 cuts in the sense that I think quantitative tightening will be stopped. And then obviously you've got 25% of the S&P 500 reporting between Wednesday and Thursday when 5 of the 7 Magnificent 7 report. And then Thursday, you should have that meeting between President Trump and Xi, and you should get a framework for a deal there. So I think all of those things are going to drive stocks higher in a broad-based rally, and I think that's how you want to be positioned.
Do you think the bias is to the positive, that investor patience over higher CapEx will be tolerated as long as revenue is higher, as long as there's a framework for a deal, or as long as tensions just don't get exacerbated from here?
The big thing is when you have easy money, money flows everywhere. Everybody's assumed to win. And as you brought up earlier, Qualcomm now is assumed to be a big winner in AI. But if you notice, Nvidia, Marvell, and Avago, at least the last I checked, they were all up as well. So right now you're in this environment where despite investors going, well, how many have won in search? Well, it's just Google. How many have won in e-commerce? Well, that's just Amazon. What about streaming? That's just Netflix. What about audio? Well, that's Spotify. Right now, the assumption is everybody's going to win because you've got this easy money. You're going to get a rate cut, going to get quantitative tightening probably stopping. You'll get another rate cut on December 10th. You'll probably get another one to start next year in January. And then you're going to get a new Fed chairman in May that's going to want even more rate cuts. Right? So we've been through this scenario before in 2021. Inflation went from 1.4% to 7%. And the S&P was up 27%. And so you're in that same exact environment where everybody's going to win, enjoy the party as long as it lasts, and then prepare for a hangover sometime late next year.
Right. I was just looking.
Big call by Dan Niles. He said, prepare for a hangover late next year. So basically, that's him basically saying, we're going to actually be party on all the way to late next year. That's a big call. That's a big call. So basically, if that's the way he's viewing it, he's viewing us as in late 2020 right now. And then we had a topping of a lot of the high valuation speculative names. We had a topping of those stocks around February of 2021. But overall, the market kept going higher. We had the meme craziness in the summer of 2021, AMC, GameStop, all that stuff. And then big tech actually continued to rally all the way until it peaked November 2021. And then we had a massive hangover after that, right? So that sounds roughly what he's talking about here. Very intriguing.
Last time the Fed cut, Dan, with inflation at these levels, October 08, right? So how much are you worried about the other side of that mountain, as Tepper might say?
Oh, the other side of that mountain is going to be horrific. I mean, I believe that sometime late next year, you end up with a 30 to 50% correction in a lot of these AI-related names. But it doesn't mean, Carl, that between now and then, these stocks can't go up another 25, 50% or more, because you've seen this same picture show in the late 90s. And back then, the Fed was actually raising rates, don't forget. And the market still ripped. Nasdaq was up 86% in 1999, and then it started 2000 up 24% in just over 2 months. Obviously, the hangover on the other side was terrible, but you made a lot of money just sort of staying with it as long as the government kept screwing up and making, as long as you had investors believing everybody's going to win. And Qualcomm today, for me, the interesting part was all the competitors were up. And so we're still in that great mode of, hey, we've got all this money flowing into the market. It's going to find its way into all these different stocks.
Yeah, I feel like we should give investors a little more credit, though, because we have seen some dispersion, particularly in internet more recently. Netflix and Spotify down about 9% over the last month. We saw what happened with software, especially in the early days of AI, where investors were kind of thinking about how AI could eat their lunch. I mean, do you expect some choppiness in places like internet and software that could be disintermediated by AI?
I mean, here's the bottom line. You're going to see some companies do worse than others. Obviously, the 5 that are reporting coming up, Apple and Amazon, they're up about 3 to 6% year to date. You look at the 3 that are reporting on Wednesday before those 2, and Microsoft, Google, and Meta, they're up between 25 to 40% year to date. But what I'm saying is, for an investor that's not doing this 24/7, if you look at just the broader market, since the Fed cut on the day before the Fed cut on September 16th through last Friday, you had the Magnificent Seven up 2% on average. You had the S&P up 3% on average. The Russell 2000 is up 5%. So I think right now you're in this phase where, now that you've resumed rate cuts, because don't forget, the Fed was on pause for 9 months. It's the more speculative areas of the market that care about rate cuts, the unprofitable segments of the Russell 2000. And you're seeing it where these stocks are levitating. And so I think, you got, to your point, Leslie, you've got a lot of company-specific risk. If you have a disappointment, we saw that with Netflix results, right? You're much better off just being broadly diversified and saying, between tariffs, deals getting struck, rate cuts, a new Fed chair in May, just be diversified and just enjoy that way, rather than taking a lot of company-specific risk where you might end up owning the Apple, Amazon, versus a Microsoft, Meta, Google so far. But, I think all 5 will do pretty well. Amazon, I'm a little bit more concerned about, but I think all 5 in aggregate will be well this.
Interesting comments from Dan Niles there. Wow, I appreciated those comments, okay? All right, guys, appreciate you joining me as always for this 56-minute beast video. Once again, pin comment down there if you're looking to reply, join our private stock group, private wealth group. Once again, January 1st, we moved to minimum $100,000 net worth to get in there. So if you have under that, make sure you get in there before that goes up. And then we'll send you Steel membership cards to you. You'll get access to my entire library of premium courses, access to 1000xstocks.com, access to exclusive weekly videos, access to see the stocks I'm buying and selling in my nearly it's well over $4 million portfolio in the public account now at this point in time. So that'll be pinned comment down there. Much love and have a great day.